Hey guys, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was October 28th, 2009, getting a day closer every day to this great Halloween holiday we have here in the U.S. Here in the U.S., Halloween is one of our favorite holidays at the end of October, so hope you guys are having fun preparing for All Hallows Eve here in the U.S. I want to remind you guys of our free resource online. Go to youtube.com/School of Trade, and please be there, guys. Subscribe to our channel, and please rate and comment on this video. How do we do today in our room today? Well, we went, 3 for 3, 4 for 4 today. Kind of a choppy day in the market, so we didn't see very many big winners here. Took a bunch of little small winners here. $380 in our pocket. Our monthly total now to over $8,300 USD here in the month of October. Been a challenging month. I'm very happy with the results so far. I would like to get us above that 10K level, but as you know, we've got next month as well. So keep in touch. We will keep you posted. The term of the day today is divergence. Now, divergence is a very common term. A lot of traders know about this term. A lot of people are, however, though, misled by what a lot of these terms can mean and how to use it as actual setups. So what is divergence? It's considered a leading indicator, we believe, as sentiment. Now, in my opinion, divergence shows sentiment. This is not a setup pattern. Now, I'm going to talk about that a little bit later in this, but I see all the time new members and new guests that treat divergence the wrong way. Now, divergence, by definition, is a drawing apart, right? Lines extending from a center. Separation or division, variation or deviation. One goes up and one goes down. Now, common indicators that we use when identifying divergence, and again, divergence is a sentiment tool. These are RSI, stochastic, okay, so momentum like RSI and stochastic, MACD, and the CCI. So there are many common indicators that we use to identify this divergence. Now, you could also throw in the pace of a tape indicator for divergence. You could also put moving averages for divergence. So a lot of different variables we can use, little indicators we can use to identify this divergence. Now, of course, guys, there are two basic types of divergence. There's regular, where price makes new highs and the indicator does not. And there's hidden divergence, which is where the indicator makes new highs and price does not. So again, regular, where the price makes but the indicator doesn't follow. The hidden divergence is when the indicator makes the move but the price doesn't follow. As you can see, right, they are diverging from the center. They're going in opposite directions. So how do we use? Well, like I said earlier, I see too many new guests in our room every day that come in and they ask about divergence trade setups. Now, whether or not they're learning it from another educator out there, or whether or not they're picking up for free on the internet somewhere, guys, do not be fooled, guys. Lots of educators out there love to pass off divergence setups as a quality trading system. Guys, you need more than that. You are never going to be able to see the quality returns you're looking for by using nothing but divergence patterns. They're far too many, they're too difficult to filter, and basically they're not going to give you enough confirmation, or you won't be able to tell the good ones from the bad ones. So we use divergence because the patterns, right, are not consistent enough to be used in entry. We use it for sentiment. So again, don't be fooled out there, guys. A divergent system is not going to cover the bases. You need to have more rules. You've got to have better patterns, something that gives you a little bit more higher percentage of your results. Just simply using divergence patterns will have you trading way too much every day, and you really will never really be able to figure out which ones are good and which ones are bad. There's just too many to follow every day. So divergence, again, guys, regular and hidden, and keep in mind we use common indicators such as the RSI, stochastic, MACD, CCI. Don't forget about the pace of the tape indicator as well when we're looking for price going up and the indicator going down, or the indicator going down and the price going up, right? So basically, they go in opposite directions. Now, of course, we're going to show you guys what divergence means. We'll show you what these different divergence setups look like, or what divergence can be used to identify sentiment in our trade room tomorrow morning. Come out and join us Monday through Friday. The European session is still suspended for low volume right now, so come out and join us at 7:45 Eastern Time when we open up for the US session. Tomorrow's a Thursday, so tomorrow we have a free webinar at 11:30 Eastern Time. And as always, guys, if you're coming out to join us for the first time tomorrow, grab a copy of the beginner's course. It's a great head start for your free trial. Now, let's take a look at some of the trades we took today. Here in the Russell, we got our day off to a pretty good start here. Now, if you were with us in the room this morning, what did we see? We saw another day of very slow, sluggish price action until we got through the 9:30 open. We, of course, had 10 o'clock news, 10:30 news. So we were waiting, of course, for the right times to trade, but we had to wait, first of all, for some volume to come in. Well, thankfully, here we saw some decent volume here in the Russell after we opened up after 9:30. Now this is a great example this morning. If you guys are with us, we were originally watching the Euro, but because our patterns are universal, we quickly saw the Euro going flat again today, so we got aggressive, resourceful, we swapped out the Euro for the Russell, and of course just in time because we saw these patterns develop right away here on the Russell. So because our patterns are universal, they'll work on the Russell the same way they'll work on the Euro. The Euro wasn't moving this morning, so we switched it out for the Russell. And of course here on the Russell, we originally here were looking for a breaker short. Just after 9:40, we had seen the open come and go, and we're looking at decent price action now. We were looking for a breaker short here below that horizontal blue line, which is just below that 83 level there on the Russell. Now, the breaker short here never triggered. We never saw the break of that swing low there marked with that horizontal blue line. So we begin, of course, looking for a two-step in the opposite direction. If we don't see the short-term trend succeed, then of course we expect to see the opposite direction start to come in and bring this thing back up. So the short trade didn't work out, so we then look for the long trade, right? Another great asset for us is that every time we look for one pattern, we have another one set up if it fails. So the breaker short failed here just after 9:40. We then looked for the entry in the opposite direction, because if the short-term trend is down and that stalls, then that means the buyers are stepping in now, and I want to get into the buy side. So we waited for momentum to curl back to the upside. We looked to, of course, make sure we had the pace of the tape increasing, nice speed of the tape, and we got long here. 83.8 was our entry at 9:42 on this two-step long, right? Two-step pattern, counter trend trade. We got our 4, our 8, and then, of course, trailed our stop to manage the final position of this trade to lock in 2 more ticks for a total of 18 ticks there on the Russell. At 10 bucks a tick, there's 180 bucks there right in the market. Now, a 4-contract trade would have cost you $2,000, $500 per contract. So this account would have only required a $2,000 balance to trade this 18-tick winner. So almost a 10% return there on your first trade of the day here on the Russell. Very good way to start the day off. Let's keep moving. Now, we also have, right, again, universal patterns, so we'll move to another market here. The pound was the next on our list. We watched the Euro, the Russell, the Gold, the Crude, the DAX guys, the S&P. We'll watch anything. On the pound here, we saw a couple back-to-back trades here. 11 minutes past the hour of 10 o'clock, we had just come out of our 10 o'clock news. We were before our 10:30 news, and here for the breaker long on the pound, entry here was at 63.90. Now, this is a good example, guys. On the pound here was where we started seeing some choppy price action. We took our first 4 ticks. We took 4 contracts off the market there, their first target at 4, and then you can see here price came right back down and basically bounced us out at our point of entry. We take our first target, move our stop to our point of entry, and then you can see here, guys, if the market wants to go against us, it can do so. It will take me out of the market there for 16 ticks there on that first trade on the pound. So 16 ticks right away on the pound. 11 minutes past the hour. We then waited a full hour, guys, until 11:11. This was, of course, after that 10:30 news event with the crude oil inventories, which was a major mover for us. We then waited 11 minutes past the hour of 11 o'clock, again, going into the transition period between the morning session and lunchtime session at 11 o'clock. A breaker long here in the pound. 87 was the entry, just above that blue swing high there, above that 84, 83 level there on the pound. And of course, again, another choppy trade here. Took our first target, moved our stop to entry, which bounced us out when it came back down. 16 ticks there on that winner as well. And of course, back-to-back winners there, 32 ticks there on the pound in only an hour. We finished up our day here on the Russell. Was looking for their pattern here, guys, just before we broke for members training today on Wednesday. And of course, this came up at 11:42 on the Russell. Now, great example, guys, of where we want to be aggressive with our defense. I got into this trade. In fact, a lot of our members got in as well. But what did we saw? When we got into this trade, what happened? We quickly saw the yellow and green pace of the tape turn to red. We quickly saw a downward sloping momentum indicator curl back up against this short trade, which basically told me, whoa, 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 I've got to get out of this trade. So we immediately exit this trade early. And of course, we tried to negotiate a good way to get out of this trade by moving our stop down. So what I did was I saw price a couple ticks below my point of entry, so I was in the green. And I simply moved my stop down because I saw momentum and price action curl. That, of course, protected my position just in case the market curled back against me. It did. It took me out of my point of entry for a scratch trade. All right, guys, so of course, final trade of the day here was a scratch. So that shows you guys our 380 for the day. Now, of course, recap, guys, our trade opens up tomorrow morning at 7:45 a.m. Eastern time. So make sure you come out and join us tomorrow morning, 7:45 Eastern. Grab a copy of the beginner's course if you're coming out and joining us for a free 3-week trial. Please rate and comment on this video. My name is Joseph James. If you want more information about lifetime membership, drop us an email, sales@schooloftrade.com. And as always, we'll see you guys tomorrow morning in the live trade room, 7:45 a.m. Don't miss a tick.